Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, we're back here on YouTube and we're looking at the iShares ETF for the Russell 2000 today, so we'll be looking at small caps. You'll also be getting a video on YouTube later this week for gold and silver, and if you're signed up to the Patreon you'll be getting an update on Ethereum later in the week, which will be our Patreon only video for the week. So without further ado, let's have a talk about the Russell. So small caps, right? They're still lagging significantly behind where the broader indices have been well off to new all-time highs and beyond. Now that wasn't a surprise to us. We've been bullish on the broader stock market for a long time, ever since we called the lows around late 22, early 23, and we've seen the broader index, the S&P 500 and the Qs, just continue on higher. But we haven't made a new all-time here in the IWM, and the Russell was still below that high set back in November 2021. So we've either topped and we're doing some corrective move before we head lower, or we're going to race to catch up. Now in the past it tends to be the case that the broader market moves first and the small caps race to catch up once the broader economic situation it favours small caps. So that would be lower rates specifically, and we're going into a lower rate environment, so there's a strong bullish argument for why we're going to move higher, but it's not the only option. Alright, so on the note of discussing different ideas, let's start by looking at some different long-term interpretations of the count. From the turn of the millennium, essentially, or 2002 onwards, and to where we are in present day and where we could be. And like I said, feel free to make your comments about which one you think is correct, and if you think neither is correct, feel free to make a suggestion. So, the first one I want to talk about is this one. It's just called this the LTF count for the moment, long time frame count, and it's pretty simple, which is I've labelled it cycle wave degree, but you could label it super cycle if you really wanted to. You could label it primary into cycle if you wanted to. It doesn't really matter, but the basic idea is we have a 1 into a 2, we have a 3, a long 3 which takes us all the way up into 2021 from the end of the GFC in 2009, and then we come down to the low. So that low was the 2022 low, and oh, I clicked on the wrong thing there, sorry. The 2022 low, and from here we are now marching up in a fifth cycle wave. Now this will likely take several years to get to the highs. It doesn't have to take that long, it could be over with more briefly, but if we give it the benefit of the doubt, for example, if we were to project the length of time the wave 1 took, we can do that using our fib time extension tool. So we can take the length of the 1 and we can come over to the length of the 4, and we can see that we would find the length of the 1 somewhere around 2028. Towards the end of the decade, maybe we get a repeat of the Great Wall Street crash 100 years later. We go into 2029 from 1929. I have a account which I've shared in the past for the Dow, which lines up pretty nicely with that idea. So we're into a fifth wave, so we've got a long way to go yet. Potentially several years of 1, and we're 1, 2, 3, 4, 5. We're looking for 1, 2, 3, 4 and 5 waves up in this fifth and final wave. That's one long time frame count. An alternative idea is this, and this is the idea that we've completed a impulse from the GFC and before from 2002, and then we've moved up into a cycle wave 1 high already, and the way we did this was as a 1 and a 2, a 3 and a 4 into COVID, and a big violent move up in the fifth into a wave 1, and then we've had an A, B, C into a wave 2, and now we're going off into a cycle wave 3. This is much more explosive and it's going to take a lot longer to finish at cycle wave degree. However, this does open up an alternative idea, which is that the 2 is not in, and the 2 is actually still on the way, and is going to be over here somewhere, and we can express that by using this bearish addition here. So as you can see, I'll move that back there because we've got a spare 2 here that I've already introduced. And this idea is that we're actually in a sideways channel, corrective channel. Let's just label that. And we're going to carry on lower. So in this count, let me just switch off that one. You can see more clearly if I take away some of the detail. We're going to be looking for a retracement of the whole move to the high. And if we just bring back the wave 2 retracement here, we can see how that could potentially bring us down to the 50% retracement. Yeah, I've got this little polyline here, but we could always just quite easily move that along a little bit, considering how long it could take, and we could come down to the 50. We could even come down to the 61.8, depending on how long it takes. Okay, I've got it currently on the smaller time frame as a double zigzag. So A, B, C, W, A, B, C, X, and now we're going to come down in A, B, C, Y to find a primary wave Y and to find the cycle wave 2, and this is going to be a very, very, violent and aggressive bear market when it arrives. There's also the alternative here. I've got A, B, and C marked as primary wave degree, orange count. This suggests that this could be a 3 into here, as opposed to 3 into here, or it could be A, B, C, 5 into here, 3 back, 5 down, or it could be 3 to here, 3 to here for a flat A, B, and C. We don't know, because we don't know if the corrective part of the move back up is over yet. So I know I'm talking a lot already, so let's just go through them super duper simple. Okay, so we've either got, and I'll timestamp this, we've either got 1, 2, 3, 4, and now we're off into highs. The idea I think supports this is that we have overlapping price data here, and 3s and 4s as this overlaps here, 3 and 4, and this overlaps here, 3 and 4. 3 and wave 4s tend to overlap one another, and this overlaps this, and this overlaps this, and that's very typical Elliott wave behavior, as anyone who knows Elliott wave will know. So I tend to favour the idea that we're now in the 5th wave going higher, and that this is another 5-wave structure within that wave 3, 4 and 5. That's the first idea. The second idea is that we've already completed 5 waves up. That we had 1, 2, 3, 4 and 5. And this either completes a wave 1, 3 waves back into a wave 2, and now we're off into a wave 3 and we're going to absolutely explode higher. We could also have finished up here in a wave 1, and this could be A, B, C, or W, X, Y, or 535 ABC, or A, B, C flat. Either way, it's a 3-wave correction, yada yada yada, and we're going to continue lower before making new all-time highs, unless we are in a flat pattern, in which case we will make new all-time highs before turning lower as well. And that is essentially the 2 long-term counts I've got. If you can think of an alternative, or you have an alternative, feel free to share it, and if you don't want to, that's fine as well. But how we get up to the high of November 21 is more relevant here than it currently is in the broader stock market, as we have continued higher in a very bullish fashion, and I believe we've gone beyond the point at which we could possibly call for a flat pattern to still be in play. So we're either off into a larger wave degree, which is going to take several years to complete, or there's something else going on and it will be expressed here in the small caps as and when it happens. So I'm going to favour for the meantime that we've gone 1, 2, 3 and 4, and now we're pushing up in the 5th. So now that we've said that, let's now zoom into the smaller time frame and take a look. So we're going to come down to the 8 hour and we're going to add in our bullish count here. Alright, so this is now breaking out into a wave 3 extension within a larger primary degree 1. That's what I'm looking for. So we've come down in a leading contracting diagonal of 1, 2, 3, 4, 5 into an intermediate A. We've then gone A, B, C, D, E at minor degree for an intermediate B for a running triangle. And then is it a running triangle? Does the B go beyond where the A began? No, sorry, the B stays within where the A began, so it's just a symmetrical triangle. We then come down in 1, 2, 3, 4, 5 impulse to complete the C here. And then from that point, we're now pushing higher. So all we've got to do here, since I haven't updated the count, is we just need to budge this over up a degree. So this all has to go up a degree to fit within our intermediate degree. This now needs to go to minor, and this now needs to go to intermediate. There we go, and this now needs to go to intermediate as well. and that's to fit inside of the cycle wave 4. So we've got A, B, C, primary degree, cycle wave 4, 5, 3, 5. It's a zigzag, and it's an extended A and then a short C, but it's still a 3-wave zigzag structure. From here, there's several ways of interpreting what's going on. It's ugly. Let's just be absolutely honest. There's no point beating around the bush. It is ugly what's going on here currently. Right, trying to make this work and to trying to make it count is very tricky. It doesn't really want to. We've got a wave 1. We've then got an A, B, C flat pattern, and this is actually a rare running flat where we extend in the B but we do not extend in the C. We actually complete before where the A completed. There is an alternate way you could look at this. I'm just going to suggest it now so that you've got it in the back of your head as an option. You've got the idea that this is a leading diagonal, okay? And we can come up here in 1, 2, 3, 4 and 5, and then we get a brief wave 1 here. So let's just set up an alternative idea then. We can say that's minor degree. We can then suggest that we've had a 1 into a 2, and then 3, 4, 5 at intermediate degree. We can then suggest that we've had another 5-wave move into a 1 into a 2 at minor degree. We can then suggest that we've had another 1 and a 2 at minute degree, 3, 4, 5, like so. And then we can suggest that we've had a minuet degree, 1, 2, and 3, 4, 5, like so. And now we're going into sub-minuet and so on and so forth as this continues to extend higher and higher. So as you can see, this extension count is the exact same as the one I was just showing you, which we'll come back to in a moment. But it just starts differently. It starts with a diag. So I'll say leading diag. Like so. Now the other one we were looking at, the bullish count, is 1 ABC running flat, 1, 2, 3, 4, 5 minute degree, minor 1 into 2, minute 1 into 2, minuet 1 into 2, sub-minuet 1 into 2. And we can see how, although this is a very bullish count, it gets invalidated quite quickly, or it can get broken down quite quickly. Minuet degree invalidates at 214 spot 6. Minute degree minor degree invalidates at 196 spot 70. I should have mentioned minute degree invalidates at 204 spot 31, and intermediate degree invalidates at 191 spot 34. So if we were to suddenly come slicing through all of this, something different's happening. Okay, it's not this extension count. It could be a bearish count. Alright, there may be a bullish count here that I just can't see, or I am struggling with, because let's be honest, if we just put a polyline over all of the highs and lows, okay, feel free to tell me what that is from an Elliott wave point of view. Right, this is how I've chosen to count it. It's about the best thing I can come up with to explain what is essentially a mess. So there's the bullish idea, 3 into 4 completed cycle degree, and now we're waiting to build up an extended 3 within a primary 1 to fill out our first year or so of what will be multiple years to top out in a cycle wave 5. Right, let's turn that off. And then we've got the bearish idea, right, which we've mentioned. We did top out in a cycle wave 1 back in November. We've stayed below that height, excuse me, phones, I always forget to silence my phone. I really should know better. But either way, we topped in a cycle wave 1, and the reason we haven't gone above the November 21 highs, we're never going to. You know, it's actually just going to stay bearish the whole time. So let's just remove the fib here, we'll hide it, and you can see how neatly this is currently channeling from point to point. Come down to here, come up to here, and now we're going to come down to here. So if this is correct, what I've managed to do is break it down into a simple zigzag with an ABC with a triangle in the middle. It's a running triangle, but it fits. It's an elderly code, sir, but it checks out. And we'll just put that there. And you can see how this definitely fits better as a three-way structure than as the force fit extension that I'm working with at the moment. Now, it doesn't mean it can't be right. The extension can't be right, because there's other alternatives as well. It it keeps giving. It keeps on giving in terms of the potential complexity here. ABC, now if this is the case, this could be 1 down, 2 back, and we're about to come racing down here. So this count invalidates also very closely at 228.63. So we really are getting squeezed into a multitude of places at the moment. You know, we're very close, which means we're in a good trading opportunity. Either way, we can trade this freely with minimal risk. So although there's confusion as to the long term, we can manage risk better as a result of the potential stop loss positions being so close to us. We have one just above our heads if we wanted to short at 228.63. We have one just below us at 215.01 if we wanted to long, and we can set up and manage risk quite well within that small little region. The problem is the conviction's low. We like to have small risk, good risk management with high conviction. This is not a high conviction trade either way, so probably better. Well, it's up to you, but I would leave that personally. I would not be particularly interested in touching that in the meantime. I'd rather wait to see what clears up, or if it clears up. So there's the bullish and there's the bearish counts, and that's all there really is to it. There is one alternative idea as well, which I'm not really sure how to frame it, but this looks like a potential diag to me as well. Okay, so this could be another leading diagonal of another larger one. So all we really do is we would basically suggest that the larger one back here and then this one back here, instead of going 1 2 1 2 again, we would take this one, which is the minute one, and put this at the completion of the wedge of the rising ending diagonal, and then suggest that the 2 at minute degree, 1 degree less than the minute degree, would complete sometime before 191.34. Your guess is as good as mine. So I'm just going to leave that for the moment and say another leading diagonal. I'll say leading diagonal, question mark, small time frame. So let's see if we can just sum up everything we just said without making more confusion. So we're either coming off of the low and we're bullish, and it's a series of 1s and 2s. Okay, we're coming off of a low as a three-wave structure, and now we're going to come lower. If we swing higher, we'll continue to support the trend of higher highs and higher lows, as the trend is your friend, and we are going high, low, higher high, higher low, higher high, higher low. Haven't made a higher high yet, but we have made a series of higher lows. So if we continue the trend higher, we should probably stick with it above these pivots until these pivots break, because it's just a good idea to stay with the market for as long as you can, long or short, depending on what she's doing. Yeah, we'll leave the Elliott wave bit there, because I really don't think there's really any benefit to going over it anymore. So let's do some classical analysis while we're here, then we'll come out to the daily time frame and have a feel for what's going on. Let's start with our moving averages. So generally, when we've reached the 250-day extended exponential moving average for a prolonged period of time, that's normally a large correction. That's normally a large wave degree correction that's completing. We had one back here from the top of 2018 when we had the Powell pivot into the December of 2018. The swing high to February 2020, which was COVID, and then the COVID crash. This was a new high in the stock market, the industrials and the Qs. It was not here in the small caps. We broke down violently. We then moved into the high above the 250 exponential moving average and stayed above it as we completed another larger wave degree higher, and then we had another large wave degree correction below it. We are now back above it and bouncing off of it consistently. We're above the 250, it's trending up, along with the 10, the 20, above the 60, which is also trending up. So far, moving averages all look bullish. A breach back through the 250 would be concerning and potential sign that the market had pivoted. Right, now, on the indicators, we are in an upward trend on the OBV, which is still intact and has not broken. We are continuing to set higher highs and higher lows. We are not setting higher highs in price currently, but we are in cumulative volume. The overall cumulative volume since the lows of October 23 are bullish. It's a bullish volume profile. Overall, we have not made new highs yet in the OBV on the daily, but we haven't in price either. So there's no particularly negative divergence there. Momentum is kind of compressed sideways at the moment, whipsawing back and forth and tightening up on the histogram, so consolidating. It's a typical sign of the market either preparing to break out or preparing to break down. You know, it's going. Momentum's dying off in both bearish and bullish directions, and it's going to make its mind up sooner or later. RSI is swinging back and forth between overbought and neutral, but only marginally overbought. No extreme readings here at all. Very sideways looking. Very boring and very sideways looking on the daily time frame in terms of the momentum indicators. Now, if we come over to the weekly, we can see that 250 exponential weekly moving average was tested and broken, as it was back in COVID, as well as it was in each of these larger wave degrees. Here's a wave 2, here's a wave 3, and here's another wave 4, here's another wave 4, and here's another potential wave 4 or a wave 2, depending on how you want to count it. We have yet to breach or come back through the 60 exponential moving average on the weekly time frame, which tends to serve as the 250 on the dailies, providing support as you saw on the day chart. So we're still looking bullish here. We're just not really giving any strong clues that we're about to break out to the upside. You know, so same here again. The MACD is just kind of flat, momentum dying off, no crossover of the average for the signal yet, spooling around between the neutral zone and the overbought conditions on the RSI, not making higher highs in the RSI, but we haven't had a higher high in price yet, so there's no bearish divergence here to speak of yet either. It really is a very boring sideways market at the moment. Now, the ABV continues to move up on the weekly time frame, but we are relatively weak to where we were till we peaked back in November 21. We're a long way off clearing those peaks. If we are going to go higher on the long term, the overall cumulative volume, if we're going up into another wave, should swing us above that wave 3 high if we're going up into a wave 5. But well, that's potentially a long time in the making. We'll have to wait and see. So, yeah, there's nothing here screaming it's going to do one thing or the other, to be absolutely honest with you. It's a bit of a mixed bag. So, look at the monthly time frame, currently neutral RSI, long-term bullish trend higher in the OBV, which is yet to break, and significant slacking off of momentum from where we peaked in November 21, but on the long time frame, if that was the top of the wave 3, I'd expect momentum to have peaked within a wave 3 along with the RSI readings to have peaked, and wave 5 will likely be more lackluster going forward, or it could be a blow off top, we don't know. So there you go, guys. It's not the greatest of videos this week. I apologise for my lack of conviction, but the market isn't really giving me reasons to be conviction. If I had to side with one, given my stance on the broader stock market at the moment, I would side with being bullish. Why would I side with being bullish? Well, I'm bullish in the stock market, and I have been since we've come off the lows. We've continued to make higher highs and higher lows, and we're still trending higher. And I'm a firm believer that, yes, you should manage risk and make sure that your stops are moving up with you, and you should make sure exposure and risk is managed across a portfolio, but you should stay with the trend for as long as you can, because that's how you make the money over the longer term. So let's assign primary, shall we, before we leave. I'm going to combine the long time frame count and the bullish count together. As such, I'm going to put this into that folder, and then I'm going to rename this folder primary. And then we're just going to zoom out and remind ourselves where we are, like so. So please feel free to comment in the comment section below and let me know whether you agree with this primary, or whether you prefer the idea that we peaked in November 21 and have either already bottomed and are now moving into a wave 3, or this is all corrective and we've got to come lower. You let me know what you think. Alright then, guys, if you're new to the channel and you like what you've seen, beg your pardon, if you're new to the channel and you like what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. And if you are interested in accessing that video on Ethereum later in the week, plus a whole bunch of other material, including the Elliott Wave educational videos on the Discord and the Patreon, there's a link in the description box below. Feel free to sign up. There's a whole raft of educational content out there, plus weekly live streams and other exclusive videos which are Patreon only, plus a huge Discord community for you to join in with. And if you're not following me on Twitter yet, there's a link to that as well in the description box below. So take care of yourselves, guys, and I'll be back with you later in the week with an update on gold and silver for the YouTube. Right, take care. Bye-bye.